I'm Charlotte McLeod with investingnews.com, and here today with me is Peter Krauth, editor of Silver Stock Investor and Silver Advisor. Thank you so much for being here. Great to have you as always.
Thank you, Charlotte. It's always a pleasure to chat with you, and looking forward to our talk today.
Me as well. I think we took a little bit of time figuring out when we would do this interview, but ultimately it's coming at really the perfect time with silver getting past 60 for the first time ever this week. So of course, that's where I want to begin. I know that you are bullish on silver heading into 2025, but if I'm remembering correctly, I think 60 is a little bit beyond where you saw the price going, at least this year. So let's talk about the move and how we got there. Is it surprising for you?
So, to some extent, yes, it is surprising. Maybe I'm a little bit jaded, having been in this space for so long and expecting and not totally surprised, of course, that silver is moving up by a lot. When I published my book 3 years ago, silver was $20, and I said eventually we're going to see this thing not only take out its all-time high of 50, but then eventually move well beyond that, and that $50 would end up being a new floor. And I think this is where we are right now. We're seeing 50 act as a new floor, and silver moving well beyond that. Does it mean it can't move back below 50? I don't think it means that. I think that's always a possibility. We can't be sure. Some sort of market pressure of some kind or major profit taking, it just doesn't seem very or all that likely to me. With the behavior that we've seen of silver and gold all through this summer, spring and summer, fall, it's been so relentless. I think that's kind of the best word that I have for it. Anytime you had some kind of a pullback, weakness, it's as if there was a lot of cash on the sidelines just waiting for these minor pullbacks and weakness to step in and just sort of take, these small bites, these small increments at the metals and supporting them really, really very strongly. That's my sense of what's been going on and how we got here. And you're right. When we spoke, I think I said that, we would be looking potentially at about $45 as a high by the end of this year. When we said that, we were probably, if I remember, in the sort of maybe mid to low 30s. And so, as I say, I myself am quite surprised. I didn't think we'd get here that fast. I thought 60 was in the cards for next year. But here we are, very, very, I think it speaks very much to, really tightness in the silver market. And, there's two things I think going on. It's very much a fundamental story, tightness in the silver market. And then the other part of it is really, an inflation safe haven. And that's silver fulfilling its role as a true form of money.
We'll definitely get into those silver market dynamics, and I like how you sum up the year as we've seen it so far as that relentless move. Just before we start talking about some of the points that you mentioned, I do want to talk about silver's latest rise, which seems to have begun around the time we saw that disruption in the Comex. And we're seeing a lot of comments among our audience, people wondering if there's a connection there to what's happening with silver. So I wanted to talk about that just initially and see what your thoughts are on that angle.
So, the October surge was a squeeze because the market came to terms with the fact that there wasn't enough silver and that the major above ground existing supply was being drained, and that London in particular was very low. Silver was moving to other markets like New York because of concerns about tariffs. And then what we saw was that the London market eventually got a little bit of relief because we saw silver flowing out of China. And then we saw the Chinese market get very low, and it's frankly at 10-year lows now in terms of inventories. So, I was speaking to somebody else in another interview just a few days ago, and I likened this to a shell game. We don't have more silver to work with. We have this fixed amount of silver. It's just which market is it in? Which shell is it under, right? So you're kind of shifting it around, but you're not you're not helping supply meaningfully. So the market is extremely tight, and I'm typically not so much one for these theories of conspiracies and so on. But you have to admit that for the CME to blame the halt of trading on a cooling issue on the Thanksgiving weekend really does raise a lot of questions. And I certainly can't blame people for having their doubts about, the authenticity of the explanation. But frankly, the move in silver obviously wasn't hurt by that. We've seen it not just support the all-time high, but then consistently make new all-time highs. It's just been impressive and again relentless. So it's quite the market.
Quite the market indeed. And I think you went in a direction that I was hoping to talk about, this idea that the silver isn't in the places where it's necessarily needed. Is that a dynamic that you see persisting or intensifying in 2026? Yes,
I do. I mean, there are always some things that if we're looking at fundamentals that could, relieve some of the pressure perhaps on silver demand, but I just can't imagine that it's going to be substantial. There's talk of, in China, for example, there's been this sort of huge amount of solar panel manufacturing to get ahead of policy changes, where there's some of the support for that supply or that production is going away, policy support. And because of the higher silver price, you've seen a lot of manufacturers, up their game when it comes to thrifting, so that they would actually, minimize the amount of silver that they need to put into each solar panel. And yet, if you look back about 10 years, every time the International Energy Agency was making forecasts that would go out 5 years in terms of solar panel production and installations, they were off by, for 5 years in a row, they were off by 2/3. Installations were 3 times what they were forecasting. Now, these things obviously don't have to necessarily go on forever, but I think that it's dangerous to underestimate the kind of demand we could get from solar. And an interesting thing to talk about here, Charlotte, is and you can say what you want about how things are, how AI and data centers and all this demand is driving the markets in general, stocks in general. But the picks and shovels aspect of that is that, data centers, first of all, the lion's share of data centers are in the US. And we know that AI is very much a US phenomenon. It started there, and that they too are getting the lion's share of it in terms of, market reaction and funds flowing into these stocks. But the picks and shovels part of it is that data centers, I think about 80% of data centers are located in the US, first of all, and their demand for electricity is expected to grow by 22% over the next decade. AI alone, and that is on top of data center demand for electricity, is expected to grow by 31% over the next decade. So all of these demands for electricity are going to have to be met with supply of electricity. They've gone initially to nuclear. Nuclear is very limited. It's also expensive to build out, not so much to run after you've built it, but to build it out takes a very long time to get it, planned, permitted, built, and then finally online. It takes actually 15 years. Solar takes a year and a half. So there's been a game changer in this sector, and that is batteries. Batteries are now, the cost is falling over the next 5 years, is falling by half. And what we've seen is that in 2025, we're expecting 60% of the solar panel capacity to be met by batteries. In other words, we're really catching up with battery to solar so that batteries can support solar and make what I call solar now baseload power. Because obviously, the sun's shining in the daytime, not at night. So if you're going to generate power with solar, you need to make up for it at night. And the batteries, when you store that daytime produced power in the batteries, you can switch to the batteries at night. And here you have your baseload power because it's available, equally throughout the day. So what we have seen is data centers, any sort of tech and data centers that are in the US that are looking to be carbon neutral have taken up solar to the tune of 5 times more versus nuclear over the past year. So solar really has been a big supply of power and is continuing, I believe, to be a big supply of power to a lot of industry. So I wouldn't count out solar and expect too much of a slowing in terms of installations, in terms of solar panel production and so on. That's a dangerous game to play, to think that that's going to slow down very much.
You can really see how important that industrial side is going to be for silver moving forward. I also wanted to touch on the investment side with you, because I think the last time we talked back in June, you were mentioning investment demand for silver this year could be something that outshines what people are expecting. So I have to imagine that has played out as we move through the second half of the year. But any points you would share on that note as well?
Yeah, so we go by what typically, at least, by what the Silver Institute expects, and they they had forecasted that the physical investment would be somewhere around, I think it was about 150 million ounces for this year. That was revised upwards. I think we're closer to about 200 million ounces. When you add in the expected investment, the market balance, when you add in physical coins and bars for this year, we're going to have the biggest deficit. When you include exchange traded funds, not the physical, when you include exchange traded funds, silver flowing into exchange traded funds, we're going to be at the largest deficit in the last, third largest deficit in the last decade. So, absolutely, we saw silver flowing into ETFs bottom around May, June of last year. They've been on not a constant rise, but overall rise. People are buying the physical, people are buying the ETFs, and that's certainly pushing a lot of metal into, as I say, private holdings, physical holdings, as well as into the ETFs as they make up for demand, and they have to shunt, that demand into the physical. So, I think, the Institute, I think, basically pretty much underestimated what we were going to see in terms of flow this year. And if you look at the silver price, it certainly has gotten people excited and moving money into the sector.
Right. So we do have this large persistent deficit in silver. And I want to look at the supply side a little bit as well. To what extent can silver mining companies respond to this demand and the higher price? We all know that, of course, mining is hard. It's hard to get a mine off the ground. It's hard to increase production. But any comments you could share there?
Yeah, absolutely. Silver in particular is difficult in terms of trying to get it to meet demand. It's what we call, silver is supply inelastic to price, in the sense that even if the price rises like it does now, it's not like if you're making iPhones, for example, and demand goes up significantly, you can tell your suppliers to ramp up production, and they can do that pretty quickly. It doesn't work that way for silver. 75% roughly of silver comes from mining it's a byproduct of mining other metals like gold, copper, lead, and zinc. And so only about 25% of silver comes from what we call primary silver mines. So when these mines or miners produce silver as a byproduct, so remember, 3/4 of silver comes from producing other metals. So if the silver that you produce is a small portion of your stream of revenues, you're not that motivated to try to produce more silver. You're happy to accept a higher price for your silver, right? So they essentially don't react to the higher silver price except to accept that higher price. So it actually exacerbates the shortage. And what you sometimes have is when the price is high and it's sustained high, what you might get if some of the miners will say, wow, if silver is, at $50, $60 and I expect it to stay there for a while, geez, why don't I just, if I have the ability to shift to another part of my deposit, why don't I start mining a lower grade part of my deposit, produce actually potentially less silver, but now at a higher price, make the same dollar profit from my mine. So you get these kinds of shifts as well, potentially. So that might make things even worse in terms of the amount of silver that comes to market and end up pushing the price potentially even higher. So, silver mine supply peaked in 2016. The Silver Institute does not see any kind of meaningful growth. That was about 900 million ounces that year. We're at about 830 million ounces, I think, for this year, next year. It takes about 10 to 15 years from the time that you find an economic silver deposit, get it planned, permitted, financed, built, and into production. You could easily be at 15 years. So the reaction time is very, very slow. I think we're going to see these shortages and this tightness persist. One last point on that: the Silver Institute itself, I think it was in the last Silver Survey report of this year, said that they expected that over the next 5 years we would continue to see silver deficits, and we would actually probably reach record new high silver deficits. So it's looking pretty bullish for silver over the next several years to come.
Absolutely. And while we're on the topic of the silver companies, I was hoping we could take a look at how they have been responding to the rise we've seen in the silver price. Maybe we can take a look at which silver companies have moved so far and where we might see potential moving on down the line as the silver price perhaps goes higher.
Sure. So they have, as you can imagine, they've leveraged fantastically the price in silver. And in fact, even so far, not quite as much as you would have expected, because the silver price has essentially doubled this year, which is phenomenal in a single calendar year. The year's not over. And the metals have been up to some extent, I'm going to say 150%, 200%. Normally you get at least a 2-for-1 leverage over the price of silver. We've seen that. We've seen more in some names. We haven't seen it in others. We've seen less in others. But I really think that if we're in a sustained ongoing bull market for silver, we're going to see that leverage across the board in all of the names. And we're going to see that, even some of the junk, some of the garbage will actually rise. What they say about rising tide lifts all boats. That's no different in the silver market as well. You're going to have some companies that happen to have silver in their names, or that maybe have silver in their names, produce some silver, but maybe that's 15-20% of their output. I don't consider those real silver companies. And so you have to watch for that. I try to aim for companies whose silver, either their deposit contains somewhere around at least 40% silver, or if they're producers, that the revenues from silver are at least 40%. And, this is a very small group of companies. So, the rising tide can raise all the names, but I think, we're going to see the quality become the cream that rises to the top of that group of companies. And hopefully we have a lot of those in our portfolio.
Well, and that's a great point on what actually constitutes a silver company. Where is the cutoff? So thank you for sharing on that point. And of course, as we're looking forward to 2026, we have to take a look at what your expectations for the price are next year. So of course, we've had this outstanding time in 2025. Is there a particular range that you're looking at for next year, or how are you seeing it?
So, I mean, look, at this point, I'm having a harder time making, sort of forecasts for the silver price, just because it's been so strong and has surprised me. But what I will say is that, some kind of a consolidation potentially here will not be a surprise. Even a little bit of a correction will not be surprised. It's famously volatile. If we see silver, perhaps back off a little bit from here and into the beginning of 2026, I won't be shocked. But frankly, to see silver somewhere below mid 40s, high 40s would surprise me. Sort of anything meaningful below that will surprise me. I think we're going to see some continued strength into next year. And I think relatively conservatively, we could potentially see $70 at some point next year. The moment that you've broken through 50, which was this historic event, frankly, because when you look at investable assets as a whole, silver made what we would call a 45-year cup and handle formation. It first reached $50 in 1980. It touched it again in April of 2011. And then it's taken from 1980 until now, it's taken 45 years for it to finally break out through that $50 level. And so we're in uncharted waters, uncharted territory. And this being the kind of market that we're in, fundamentally, as well as macroeconomically, as well as geopolitically, I think odds are silver is going to continue to climb higher, and I think it's going to convert a lot of doubters into believers that silver is going to go on setting new record highs, and that it's still relatively early in this market. We're going to see it perform very, very well for several more years.
Yeah, the price question I think is a little bit unfair because we are in uncharted territory, as you said. So I do think answering that question as you just did about where we are in the cycle maybe helps to conceptualize it a little bit better. So that's a great note for us to wrap up on, unless you had any final thoughts that you would leave silver investors with as we head into 2026.
I mean, I would say one last point. Silver's volatile. We've seen it. It's been fun because the volatility's been to the upside. So maybe, be cautious that way. Don't be surprised if you get some kind of rapid drawdowns. I do think we're going to continue to see what we saw this year for the most part, in terms of there being a lot of cash on the sidelines, a lot of investors, especially smart money. And I think that's what we've seen so far. It's been the smart money has been coming off of the sidelines and ready to kind of bid at these small pullbacks, and start to build the positions that they want to have, because they think that they see that this is a secular bull market, that it's going to continue to play out. And, that is, I'm going to say, pretty much what I would expect. So, don't let, I've said this before, I say it in the book, don't let the volatility be a reason to stay out of this market. Just make it work for you. If, you're a more conservative investor, I still think having exposure to silver makes sense. It just becomes potentially a question of the extent or the level to which you're exposed. I want to say one last thing, which I actually spoke to some mining students about a couple of weeks back, and I think it was some useful insight. There was some research done by Oxford Economics about 2 or 3 years ago, and they looked at what kind of exposure to silver would be ideal. So, there's this in finance, there's this thing called the efficient frontier in your portfolio, and that is when you spread your allocation across different asset classes. And if you take stocks, bonds, say cash, and precious metals, just as some examples, commodities, and you allocate to these different asset classes, what they do is they do the research and they say, what percentage should you have in each of these asset classes to maximize your returns and minimize your volatility? And so for a medium risk portfolio, they determined that the exposure should be 6% silver. And we're not talking about silver stocks, but silver. It was higher for gold, which makes sense, less volatile and so on. But when they did this research a couple of years ago, the exposure to silver, and it was indirect exposure to silver, was 0.2%. So to go from 0.2% to 6%, you need to 30x your exposure to get the ideal level of silver in your portfolio. Charlotte, I can almost guarantee you, pretty much everybody is well below 6%, and perhaps not even, at 0.5%. So there's a long way to go. And, having some meaningful exposure to silver should probably do a lot of good to a lot of portfolios. So I wanted to kind of throw that last bit in there.
That's a great bit of perspective to end on. I think you're right. I think probably barely anyone is having the exposure to silver that they should. So thank you so much for coming on to talk about what's going on in the market, and hope to have you back again soon.
It's been a pleasure as always, Charlotte. Look forward to that.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Peter Krauth.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.